December 8th, 2023. This is the S&P 500 E Futures Mini on the 2000 tick chart using the NinjaTrader 8 platform. This is what the charts look like today. There was a few pieces of economic data. Most of it came out around 5:30 Pacific Standard, which you can see is this big crazy spike down. It was the hourly earnings, the non-farm employment change, unemployment rate. And then another piece of economic data that came out right around 7 o'clock, which is right here where I put this blue dotted line, is the preliminary consumer sentiment. So those pieces of economic data that usually cause the market to kind of flash up or down, especially if it's an FOMC meeting. This is how I saw the charts today. It was a little bit, I guess it was kind of interesting because it didn't, as you can see how I drew my chart, it was like very ugly. I thought I saw one gigantic leg up and it never really made the second measured move here. So I'm going to go ahead and delete this. However, after the economic news that came out, it just kind of rallied and did this weird choppy price action. And then I would say from 9 Pacific Standard, which is about 9:15, all the way until about a good 3 hours, it was a very, very slow grind. It was a rally, but a slow grind. I didn't see any good setups. Most of the setups kind of came in right here that I could find, and I actually took 3 trades today, 1 loser, 2 winners, and then there wasn't much of anything else. The volume was actually quite high, but I think it's because the December 23 ES contracts are flipping over to the March 2024 contracts, and it's going to expire. These E-future minis are going to expire next week. So next Friday they're going to expire, but there's already a lot of volume being traded on the other side on the new contracts. Not saying that the majority of the trading is happening there, but there is a split and it is noticeable. So next week I'll probably be trading the ES March 24 contracts, because that's, I think, more of the volume is going to start shifting over and a lot more is going to die down on these December contracts. So I'm going to go into the trades right now. You're going to kind of see it was kind of interesting, really, really whipsaw and choppy today in a larger time frame. But as you're sitting from here to here, there's like a whole 3 hours of not many entries. There's a lot of first entries, but nothing to capitalize on that I could find. This is a pre-market. Pre-market has marked the highs and the lows, and technically the lows are way, way down here, but it looks like it's more consistent right here. There was a rally that went up and then a kind of a sell-off, excuse me. On the open, it looks like it was kind of chopping sideways, but it was a bullish bias. I didn't see any good entries on the open. Technically, you do have second entries in here, but they're not very clean and they don't really give you much confidence. No other good key entry points. So you're just kind of sitting on your hands. It comes up, it looks like it tests the pre-market highs. So at this point, I'm thinking we might be a range day. It's chopping, it tests it again, comes back down, and I do think I have some kind of channel here. I drew this yellow channel. It's kind of wide and large, so I'm just kind of watching carefully. It has to be a really, really good setup for me to think there's a trade. And I do see a new high here. It's a first entry long pullback, a second entry long. Second entry long hasn't been confirmed yet, but I do like the signal bar. Here, the second entry long is confirmed. It's the first break of this green down channel, and it already achieved a new low, but it's also the first break of this yellow up channel. So even though the downtrend has played out on this green channel, the uptrend on this yellow channel, I would think is going to test the highs because it came back, touched this side, came back, touched this side, kind of several times. So I was thinking maybe there's a trade there, but what kind of held me back is right here where 7 o'clock is, where the preliminary consumer sentiment is going to come out. So this is like 1 minute right before. So to take this trade, you don't really know that it's going to go up, even though it's setting up for a second entry long. It could easily flash down because it's unclear how the market is going to react to the news. In this case, it was bullish, so it was consistent with the price action, but you don't know that. And it's okay to, for me, I thought it was just fine to just sit out, but I did mark this. Had this actually set up at a different time or just a different time of the day, then I probably would have considered taking this trade. However, it flashed up. If you took this trade, you would have been pretty profitable. Continues chopping up, and now it's dwelling outside the yellow channel, and I'm not really confident in it anymore. But I'm thinking it might be falling into this green channel. There might be a 2-piece kind of trend channel going up. it kind of flashes out and it's kind of breaking out of the green as well. Now it's coming down on this orange one. Originally I had the orange bottom of the trend channel a little bit tighter, but then I drew it down to here to kind of encapsulate this and not have an overshoot. Kind of verified here, but then it broke out again. So it's a little confusing here. Fortunately, I didn't have to decide to take a trade because I just didn't really like the price action. Nothing really set up that well to make me question whether I should jump in. The prices came down. It kind of falls into this congestion and consolidation range. And so this is actually where I take my first trade. It's a new low. Technically, you have a new low here, first entry short, second entry short. Technically, you have a third entry short, but the way I counted it, I said there's like a bouncing off the bottom. So I counted these two as one, and I said it's like a first entry short, second entry short. Clearly, I thought we were in a trading range. I also like that there's a potential triple test here, and I'm at the top of the range. EMA is, at the moment, holding prices down. There's not enough touches to really confirm it's holding prices down, but I was basing upon the fact that I'm at the top of the range. It looked like it got rejected. It's a decent signal bar, so I took a short here, right at the same low, hoping for a 1-point scalp. It made 1 point, but it never filled me. Then it reversed, and then it stopped me out right here. And then it kind of went up, and that's my first trade of the day and the first loss. It breaks out of the green channel, makes a new high, so I'm thinking an uptrend may have played out. It kind of bounces around, and here I take my second trade. You can already see where I took it and where I got out. I saw this as a new high. I saw it's also the break of this green channel. Broke out here, made a new high already. Now push down once, pull back, push down a second time. When I pushed down a second time, if it went up, I was thinking, okay, after the break of the green channel, there were two attempts that were coming down, and in this case, there's already one push. I was interrupted briefly there. So as I was saying, there's already one push down, pull back, a second push down, and it looked like the second push down might have played out, but when it came up here, I was watching on this candle when it failed on one tick and it was clearly dancing down here. I tried to enter to ensure I'd have 1-point scalp before I hit the bottom. So I placed my order here and I was just kind of sitting, hoping it'd come back and pick me up while this was playing out. Came back, filled me, and then quickly flashed down and let me get my exit. I just wanted to make sure I got out before I hit this low. That's how come I set it this far back. And technically, if you want to be more conservative, you probably wait for this candle to close. But if I did wait for this candle to close, I felt like I was a little nervous that I wasn't sure it was going to close and look like this, and I was thinking I might miss the trade. So this was kind of a quick entry while it was forming, and I wanted to get out before I got to the lows. Then prices continue moving down. Looks like if you're going for more than just quick scalp, you would have gotten a pretty nice trade. Flashes down, breaks out of the orange channel. This is actually where I saw my third setup. So it's one red, one green, and I saw this as a double bottom. But I also saw this as potentially a new low, first entry short, second entry short, and on the second entry short, it failed right here. Now I'll admit after the fact that this is really aggressive because it did look like it pushed down. And I was basing upon the fact that this looked like one big leg, pull back, second big leg. So it made a measured move, and I was thinking there might be still some kind of bullish bias to actually push back up. But it made this measured move. It looked like it was respecting it somewhat. So I just kind of draw the line where the measured move was. It looked like it was having trouble breaking down. So when I saw this failed second entry, because it failed right here, I decided to enter when it flashed up, and I entered right here. Then it came all the way back down. So at this point, I was pretty concerned that I, probably jumped the gun, and I still think this was an aggressive trade. I probably should have skipped this one because my stop loss was down here. It dances around. It kind of psychs me out because if I did keep it one tick below this original bar, then I would have gotten stopped out on this one and this one, but I kept it below the very low here. I was able to quickly scalp out. Well, not quickly, but I was able to scalp out. And again, I admit in hindsight, this was a really more riskier trade that I probably should have just skipped because I was just basing it off the strength of the measured move. And I did base it off of the break of this orange channel, and I was thinking it's going to be another break on this side. So then prices continue moving. Now this is actually a setup I thought was actually pretty decent, but I didn't recognize it at the time. I saw this as a lower high. So technically if a new low here, it's a first entry short, second entry short, and technically this is the lower high on the big visual. There's two measured moves up. You can see right here, one leg up, pull back, a second move up, and it did meet the measured move exactly to the tick. And it looked like it tried to push up a third time here, but it failed. And well, it hasn't failed yet, but it closed very, very bearish. I think what would have pushed it over the edge for me to take the trade if the signal bar actually closed below the EMA, even though EMA is a little bit flat, if it closed below the EMA at the time, I think I would have felt more confident. But again, in hindsight, I'm looking back at this and the EMA doesn't really matter as much when it looks like it's ranging. Of course, that's after the fact, but in real time, I was just taking that into account. So I missed this trade and it flashes down. So this is a potential setup, but I don't have the experience or seen this enough to feel, confident in taking this trade. And this trade itself, this candle was only about about 7 ticks. So it might have been worth the risk. Again, as I said, if it had just been a little bit lower, closed a little more bearish, I probably would have taken it. Prices then continue moving down. At this point, I'm looking for another channel coming down. I thought there was like one touch, two touch here, but I couldn't get the top to fit very clean. It just never, I just playing, tweaking, and everything just didn't look to fit very nicely. So I just had to sit and wait. I saw a failed second entry long here. The new high is a first entry long, second entry long failure. Now, this is what I call an almost setup. The reason being is it almost was a good setup because one thing is it ticked above, one tick above this guy where you think people are going to go long, then it flashed down and also ticked one tick below. The thing that I wish it would have done was that it would have closed more bearish, closer to the bottom, and I felt a little more confident, but it looked like there was still some buyers in the market to push this up slightly higher. So I was also debating whether this green channel was actually in play and would it bounce off of here and continue upwards. So that gave me pause when I saw this failed second entry long. So I thought it was an almost setup. Turns out it would have worked, but that's okay. At the time, I didn't know. I drew and extended this green channel. I thought this was an overshoot because I did try to drag this line all the way down here to try to make it look better. And as you're going to see, it doesn't look that clean. And I originally thought, okay, maybe it's just this big overshoot for whatever reason. I put it all the way back here because now this looks like price action fits cleaner. And throughout all this, I didn't see any good setups or any safe setups. Like they're all mostly first entries with count resets. It keeps going up, pushes down. Now it's breaking out a second time, and I'm wondering if the EMA is going to hold. It doesn't hold for about 2 to 3 candles. It flashes back up. I didn't like that it didn't enter fully and have this as support because I was debating whether the support might actually have been slightly lower, but then that doesn't have these clean touches anymore. So I kind of put it right back. Prices then continue moving. I see a failed second entry short. Now I didn't really like this setup, but it was there per the count because you have a new low here. The first time your first entry short's right here, and the second entry short happens right here. But to take a second entry short here feels a little iffy because you can clearly tell the bias is bullish. There is enough room to the EMA, but then you have a failure here. It ticks 2 ticks below, then flashes back up. The reason I don't like this is there's not much room to the recent highs, and I would rather have had this come down, touch the EMA, and then bounce up, back up. On top of that, I'm not really sure if this is the bottom of the channel because as you can see, we already had one break, we already had a second break, and it didn't have enough power to cleanly move back into the into the trend channel. So that just kind of gave me pause. It's like, okay, well, it looks a little bit choppy, a little bit noisy, so I'm just going to wait. Moves up. It respects the top very well, though. And it finally comes up, it breaks, and I see this as a new high. It's a first entry long, pull back, second entry long. This is a terrible signal bar for second entry long, plus it formed below the EMA. The second bar, the trigger bar, is better. And if I were more aggressive, I might have considered taking the trade. I didn't see this as a possible range yet, so I drew this blue range later. But it did kind of create a triple bottom here. But I also just wished it had ticked one tick above the EMA to give me a little bit more confidence. And if it had, not, touched the lows, making a triple bottom here. So I saw it, I wasn't sure, decided to just leave it alone. And I did also count that it was the break of this channel. It could be one push up and make a second push up to test the highs. But again, as I said, this channel isn't fitting the most clean because like, is it down here or is it up here? It could be here with this overshoot. and maybe this was the midline, maybe it was a two-tier channel. Actually, this does kind of fit much better now after the fact in my current view. So yes, this probably might have been a better trade, but I just found this right now. So had I found this earlier, maybe I would have considered this as one touch, two touch, and enough of another key entry point to take this trade. But as I said, in real time, at the time, I didn't see that. So now that I see it, it might have been worth a trade. When prices continue chopping, then it's just kind of getting late, and I decided, well, I just ended up in the green, which is like one red trade, but two green trades, which made up for it. I just decided to just kind of sit on my hands, and then it goes into the close. So it was kind of weird whippy day. It had two big legs up, this weird choppy two legs down, and another big leg. And it's hard to argue that's really a range, and it's hard to argue if it was in a channel because the channel, I mean, where would you put this channel? It doesn't really fit very clean anywhere. So you just have all these really funky looking piecemeal, I guess, swings that move up and down. So it was an interesting day, interesting way to end the week. And then next week, just remind myself that they're going to start on the, I'm going to start trading on the March 24 contracts, which will have probably some choppy volume because there'll still be people trading on this existing one. But as the week progresses, there's going to be a lot of volume that's going to drop off on this one as people shift over. So also, I think next week there's a FOMC rate decision. So that will also cause a lot of volatility. I think it's coming on Tuesday and Wednesday. So that should be interesting as well. So hopefully that was helpful.